capital market, and that also in front of the SECP regulator. So I'm going to try to avoid some of those things so that I remain safe for the remaining part of my tenure here. I have to say the topic is very close to my heart. We've done a lot of work in Asia Pacific on infrastructure. I think one of the things that you end up as last few speaker is to actually figure out what to say when everything has been said. And I feel I am almost in the same situation. But I'll try to provide a little synthesis of what has been discussed, because all the elements that have been discussed were a part of my notes and remarks that I was to make. So let me first talk about establishment of Infrazamin. It happened when I joined the board of Karandaz. It is a milestone. First of its kind SPV. It fills in a gap of infrastructure architecture supported by the needed regulatory approvals and space which came through at a fast pace from SECP. So at Karandaz, we are extremely proud to have incubated this joint venture between Garanco, Infraco, Asia Investment and Karandaz, and I would be amiss if I did not highlight the fact that it's all because of the financing that came from FCDO that has been a long-standing development partner for me as a professional, but also for Karandaz. It is important to recognize that ICP, it's unconditional, irrevocable, offers highly rated PKR denominated credit guarantees. It has the power to leverage long-term infrastructure finance from both domestic and foreign investor if there had been a conducive environment in which we were operating. So Pakistan actually has made some important inroads in structuring and implementing large-scale infrastructure. During different parts of my career, I have been affiliated and associated with it, and more recently, I had submitted a proposal for setting up an infrastructure bank, which fell victim to the politics of the various governments, unfortunately. Now that I'm not in the government, I can speak a little more freely. So, what are the major impediments impacting infrastructure development? One, as has been talked about, low infrastructure investment to GDP ratio at 2 to 3%, well below the required financing, which has been placed at 10 to 12% of GDP, according to the UNSCAP work that we did on infrastructure. Total infrastructure financing requirement is close to about $124 billion over the 2016 to 2040 period. And as an economist, we need to sharpen our pens and pencils and work out how much revenue we need to mobilize to provide public investment to leverage private investment. And that's the way to go based on my Asia Pacific experience. However, Pakistan's fiscal constraints limit public investment in infrastructure, which is critical, as I see, to attract private financing. And I'll dive a little deep, as was pointed out by our earlier speakers. Lack of long-term institutional financing and innovative project financing is the third constraint. I had the privilege of doing work on insurance sector reforms and pensions in my early part of career when I was based in Pakistan, and later on when I came, I was asked by Minister of Commerce to do an insurance industry reform program, which is gathering dust, unfortunately. It had so much potential if we really concentrated on insurance sector reforms. The reason why they are important is, of course, for all the talk we have had across the panel, that we really need to focus on trying to get more and more liquidity for the capital market. And unfortunately, that has been not fully understood, as I see, to make the story short. Then there's a fourth constraint, which is structural and institutional shortcomings of infrastructure sectors themselves. So you can't actually move in projects if you don't have a conducive sectoral environment where cost of purchase, for instance, I can talk about gas sector, that government decides what would be the price at which we will procure gas and at what price we will sell gas. So that's day one, making gas sector projects a failure, as I see. Turning to credit enhancement mechanism again. So credit enhancement mechanism and priorities have to be strategized to not only meet traditional infrastructure finance requirements, but to be supportive of new emerging trends of infrastructure. And I'm trying to collect my work that I've had with the G20 think tank, where we have put in a lot of work into advising G20 on the way forward. But I will just try to be very simple for now, that post-pandemic, first there was a recognition that besides, say, energy and all the hardcore stuff, you need to prioritize healthcare, education, digital services, and areas like that. So now this has become a very emerging area, and at the Belt and Road Initiative discussion of the global advisors, all the 12 global advisors advocated that the BRI should now be directed from dealing with energy infrastructure shortages or whatever in Pakistan to moving to some of these areas. Second emerging area, as has been talked about, is that Pakistan climate vulnerabilities, which are now quite steep, and we have seen it visibly during the floods, they require investment in climate resilient infrastructure, climate adaptation and mitigation. And we all know that these are costly segments of infrastructure, so they add further to the cost, and they do require credit enhancement. And of course, we need to promote technological solutions. So each of these require InfraZamin itself to be equipped with sector thematic knowledge to ensure we promote sustainability, cost effectiveness, innovation, and enhance our leveraging power. So I think InfraZamin, once it's made a breakthrough on credit enhancement and it has a niche local currency, then it needs to think of how to spur infrastructure itself to have a self-generating demand for infrastructure pipeline, which was a subject matter discussed a while back. But I have to say that success of InfraZamin, unlike the success of the banks who are making the highest profits in midst of the worst crisis, economic crisis Pakistan has faced, will have to carefully walk the tightrope, because its success depends on swift resolution of macroeconomic crisis. Macroeconomic stabilization will come, of course, with monetary tightening, which is happening and is manifested by rising policy rate, which is all-time high, and we are all screaming about it, but do recognize that policy rate is still negative. And of course, we need resumption of flexible exchange rate management so critical to do credit enhancement and have confidence in what you're doing. Reduction in fiscal deficit and build-up of reserves will ease the enabling macroeconomic environment, which ultimately is a fertile ground for infrastructure. Management of risk and its pricing will be critical. You have to calibrate this very effectively, and you all have the competence, because you have to manage the cost, credit enhancement cost, and not make it so unbearable that the party or the deal gets lost in the process. I'm just talking from my experience of credit enhancement at the World Bank and dealing with clients. So let me move now to the financing side from the macroeconomic. To promote infrastructure support for sustainable infrastructure, there is need, of course, and a subject matter that has been talked about extensively, to redirect large proportion of bank assets from treasury bills. It is the only way to release the funds for infrastructure. Can that happen in short term? Absolutely not, but deep-rooted fiscal reforms is what we need. Banks' asset base, which primarily consists of short to medium-term deposit, carries the risk of a potential asset liability mismatch and prevents infrastructure lending, a long-term venture. Something that has been talked about, but I think it was also politely mentioned that banks lack the experience and capacity to undertake limited recourse financing of infrastructure projects, because they typically do not provide, go for really real collateral security, as I see. And the project pipeline issue is a very serious one. And during my 5 years at the G20 in United Nations, when we had to spur economic growth, everybody advocated that we needed the bilaterals and multilaterals to put in more funding for infrastructure. All of them refused. And they said, you really need a strong project pipeline for the countries, and they will be able to attract the institutional, and I'm talking about global institutional investors' liquidity, but also there is huge amount of liquidity with the wealth management funds. We don't have to go far off. It's in Dubai and other places. So if we had very strong project pipeline, we could do wonders. And I think with FCDO still being here, that is a venture that you should still fund rather than back off from Karandas. So let me, on the financing side, make my second point, which has been also alluded to, but I'm speaking from my direct experience as India's senior principal officer at the Asian Development Bank. We worked on infrastructure financing phenomenally. We were able to do so because there were multiple infrastructure entities. They were not shut off by the government. They were managed by very competent CEOs and leaders. So besides talking to IDBI and IFCI and ICI, with whom I have really enjoyed working, in 2006, the India Infrastructure Finance Company Limited was incorporated as a non-bank finance company by the Government of India. We are still dabbling here on should we use the DFIs to do that. I mean, just go ahead and set it up, and we have the SCCP chair here, and he will support it if there were people who wanted to go forward with it. So properly equipped DFI or NBFI, whatever we call it, has the potential to crowd in investment from multilaterals like the ADB and the World Bank. I have seen it happening, and I have funded. I provided ADB 600 million and Japan Exim stepped in with another 600 million. That's only one transaction I'm talking about of 1.2 billion. And they can raise financing from tax-free bond, long-term loans from institutional investors. IIFCL alone catalyzed a threefold increase in the flow of private capital to India's infrastructure projects, which not only helped in doubling the total investment in infrastructure, but also increased its share in GDP from 5 to 7%, and we are still hovering from 2 to 3%. Third, I think Farooq has talked beautifully on capital markets, and I totally associate myself with him, so I'll try to be very short on this. Of course, it's a platform for equity and debt, and it can finance infrastructure. There are lots of prerequisites that we need. Most of all, we need an effective yield curve, and ultimately, we do need to supplement this with fixed rate long-term bonds too, if we are allowed, and the market to raise that. That will enhance liquidity and tradability in long tenure instruments, while also providing a hedge against interest rate risk. It's not the time to go for long-term bonds, but the moment there is a little sliding back, we could do that. Pakistan actually does have a very shallow debt market, 74 listed TFCs limited to financial institutions, insurance companies and large corporates only. There's a huge appetite from ordinary people to buy long-term infrastructure bonds in other countries, so we shouldn't be an exception. But of course, government has to release the institutional liquidity and stop preempting by fiscal demands, and it should try to move all the insurance companies that are not as yet listed from their comfort zone to be moving into a space of lifting. The case in point is state life insurance, which is not even corporatized today. So how can we deal in an effective manner with them? The sorry state of affairs comes with numbers. Total financing through banks is barely 7.4 billion, and debt market is rupees 424 billion for a country of this size and the population requirement and so on and so forth. Farooq has talked about the sukuk, so I won't go into it. It was done when both of us were still not there, but we saw the benefits of it, and I think it was a very good initiative. And Islamic finance, which is growing, because Islamic finance, financial institution and banks are making huge profits. So it would be nice if banks kind of combine all their profits and even invested about 10 to 15% of their profits and really invested in infrastructure. Let me end by talking about green financing. In midst of the pandemic, the biggest international push was that you give multilateral funding to the countries affected by pandemic. You need to rejuvenate economies and you need to generate jobs, to set up green infrastructure funds or just green funds or green development banks. There is a huge amount of literature out there to do so, and I think and recently, since I'm working on debt restructuring at an international level, what we are articulating is that if you are going to get a good package on debt relief or restructuring in the G20, please make sure that this time around that debt relief is actually directed into infrastructure financing platforms or green financing, so that we get the simultaneous edge out of this. So the debt relief doesn't go to pay for activities that are not productive. We should really invest now the debt relief in productive investment. The last point, 2 points that I would like to make on financing is blended financing structures. We've talked a lot about Karandas. It is one actual example of blended finance vehicle with over Pak rupees 23 billion invested in greenfield and expansion projects linked to SMEs, but it is also helping infrastructure. And we have been able to crowd in around 3 times its funding in private capital, and so forth. So public-private partnership is a subject that I have worked phenomenally, and I can tell you PPPs are a very good mechanism to have sustainable infrastructure development. I'll stop here because I know all of you are waiting to hear from SECP regulator, who will bring in much more depth. But in terms of my trying to synthesize, Pakistan needs over $120 billion is what I have talked or so between now and 2040. Prerequisite is macroeconomic and exchange rate stability. Infrazamin can do wonders in credit enhancement in local currency. It is an innovative platform. Moving forward, government needs to scale down fiscal deficit, listen to the IMF. It's not a bad thing. I've seen it happening in other countries. You have to enhance tax GDP ratio. It is the only way to reduce fiscal preemption of commercial banks and institutional investors. We should be developing infrastructure bank and specialized institution. The more we have, the less it is. We should help them compete with each other. PSX has the potential to broaden and deepen capital markets, and Farooq has his job cut out. He knows we are working on this 24 hours when we are at the PSX platform. So I want to thank you all. Sorry, this is a subject I have worked